Hi, I'm Brian Heckman here with a really crucial, very timely mortgage update. Guys, so this Wednesday, the Fed met and increased the rate by 0.25%. And so what most people mistakenly think is that that means that increases mortgage rates by 0.25%, and that's not accurate. So if you're a real estate agent watching this, absolutely you're gonna wanna share this with your clients, with your database, with your sphere of influence. And if you're a home buyer or home seller, or you know somebody that's going through that process now, or in the first quarter, even into next summer, this is really important information because we're kind of at this like very drastic, almost historic point in where rates are with everything going on, world economy, post-election, just a lot going on. So here's the deal, okay? The Fed meets and they increase the Fed funds rate, which is the rate with which banks borrow money from each other. Now, while that does not directly impact mortgage rates, the mortgage-backed securities, also known as MBS for short, that impacts directly what's going to happen with fixed mortgage rates. And so, of course, that does take into account the world economy, the stock markets, the election that we're dealing with now post-election here, the 10-year and all that good stuff as well. But it doesn't impact it. It doesn't get impacted directly from the Fed and that Fed funds rate. Now, what's interesting is MBS, the market, the bond markets move just like the stock market, right? So, they're open, similar times the stock market and all that. And so MBS actually are priced in anticipation of what the Fed would do in this situation. So check out this model. This is a 2-year look back in mortgage-backed securities. And here's the bottom line. The higher the pricing is on mortgage-backed securities, the lower fixed mortgage rates are. And of course, the opposite is true as well. And so you can see all the way to the right, we have gone off a cliff since the election. And so essentially what's happened is there's a huge rally in the stock markets and people think the economy is roaring back under a Trump-elect administration. And so what's happening is mortgage rates continue to rise and the Fed increases the rate expecting that, hey, the economy's starting to recover. And it's not a bad thing for the economy, just a bad thing for mortgage rates. And so you can see here as you look back all the way 2 years, you can see we are far worse in pricing on mortgage-backed securities. So around 2 o'clock on Wednesday after the Fed announcement, both stocks and bonds sold off quickly and sharply, which obviously is not good for fixed mortgage rates. And those are, that's ultimately increasing fixed mortgage rates. So, hey guys, here's the bad news, okay? Rates are increasing. That's our reality now. So it's time to be very realistic. In the discussions this week, the Fed also mentioned and hinted that they're going to be looking to raise the rate 3 more times in 2017. So that's the bad news. Hey, the good news, rates aren't so obnoxiously high, okay? They're still at a very good, overall, historically good rate price. And so even for like the last decade, we're still priced out really, really good. So you just have to realize too that a lot of times the markets will make an adjustment in the coming weeks after this, kind of like December of last year when there was a rate hike by the Fed funds rate and rates leveled off after that as well. So remain calm. There's not a reason to get all crazy here. Here's what you need to do though, is get on the phone with a mortgage lender that you know, that you like, that you trust, that you can be referred to by your real estate agent if you're a consumer, and get the honest information. Make sure it's somebody that does follow the mortgage-backed securities market, not the 10-year yield. As an example, yesterday, the 10-year yield was almost level while we saw sharp movements in both mortgage-backed securities and fixed mortgage rates. So it's very, very important. Hey, our mortgage team would be so honored to be that mortgage lender for you and for your family, for your clients. So you can either call or email us and we'll be more than happy to walk you through this exercise and help you out. Whether you're looking to buy this month, next month, or in 2017, we'll be honored to help you out with that. I'm Brian Heckman. You can always rely on our mortgage team to close your transaction on time, to follow up with you throughout the process, and to communicate very proactively, especially in very timely and crucial situations. Have a great afternoon.